Nike just out with earnings, a big beat, continuing their momentum. Digital sales continue to surge, up 84%. The stock up more than 90% from the March lows. Let's bring in Sam Poser, Susquehanna Senior Research Analyst. Sam, for all of those thinking that they were trying to bury some bad news by releasing unusually on a Friday afternoon, they were wrong. They returned to growth in all geographies. Digital growth continues to explode. What's driving this resurgence of Nike from the two down quarters after the pandemic, during the pandemic?
I mean, I think we saw hints of this in the earlier, in the last two quarters. They've been just working on doing their own business so well, and moving to digital, moving to direct. That gives them a lot more control over pretty much all parts of their business. And that's showing up now both in the sales and in the margins, and as was said earlier in the broadcast, in their expenses, which were well below what everybody expected.
The question is going to be what next, and they don't put guidance out in a release. They do it in a conference call. So we'll see if we get those numbers for the quarter and for the year ahead. But how do they forecast that when they are seeing strength and comeback in key markets in places like China, but also there's got to be some near-term uncertainty with what's going on in the U.S. We saw a pretty awful retail sales report earlier this week, and lockdowns in Europe.
Yeah, I mean, their wholesale business is struggling for those reasons, and that's really another reason to do it themselves. And you have to keep in mind that when Nike sells two pairs to a wholesale account, and they sell it, they can sell one pair direct to consumer and make the same sales and double the margin and everything else. I mean, it's just so much more profitable to do it themselves. Yeah. So even and that's really the story to go forward. It's a story they've talked about for quite some time, and with Donahoe there, I mean, digital is absolutely his expertise.
Right. I know he came in at the right time in January, where they were already a digital first company, and they are really shifting gears into high gears. Sam, what about the stock and the valuation? Mike Santoli noting that it is more expensive than it has been, and is now getting valued next to cloud companies when it comes to a valuation. Is that fair? And what's your target?
We have a $160 price target on it. Is it fair? If I'm a sell-side analyst, so ask a buy-side person that question. If it's going up, I think it's always fair. I do think, though, that they're investing in data so dramatically, in the data that they have about their customers, the data that they know about their retailers, the data that they use to produce goods in a timely manner. All of that is what's driving it, and what I expect will separate them going forward. And feedback from retailers with whom we've spoken has been just that. I mean, they realize that Nike is on a roll, and sometimes it's not completely to some of these retailers benefit at the same time. We've heard stories where some product that they've seen for next year hasn't lived up to their expectations, but they don't believe that they believe Nike's still very strong, but keeping most of the product for themselves.
That's an interesting tidbit. In other words, it's not a lack of innovation. It's just they're focusing so much on direct to consumer. Sam, we've got to leave it there. We'll see what we get from the call.
Shepard Smith here. Thanks for watching CNBC on YouTube.